Hello, everyone, and welcome to this edition of Investing and Trading Live. As always, my name is Josh Wilkes, and this is take 2 of yesterday's podcast. We had an interesting little snafu yesterday. We did the show, and we looked at it today, and there was no audio on it. It's once you get above 20-something years old, your technology turns in, your skills anyway, turn into the skills of a 75-year-old farmer as technology skills. So that being said, we're going to redo these 3 pillars to successful trading and investing. And to do that, I have my tech guy, and he has showed me how to put the audio on here today. I got Luke Young on the show here today, and we're going to discuss those pillars to successful investing. Luke, how are you doing today?
I'm good. I'm glad it's working.
Yeah, I'm glad it's working too. Boy, it's funny. You go back to the site and you see, what a great podcast that was, and we have a lot of listeners. And boy, they got no content at all. So today, I'm glad you're on the show here today to do that, to show me how to do this with the audio. But also, I want to talk about those 3 pillars to trading and investing, and that's what you really need to be successful in the financial markets. There's certain characteristics that you need in the markets to be successful, but also some sort of a plan for that. And the first pillar to successful trading and investing is having odds, stacking odds in your favor. Now, you do a lot of trading and investing, and you have, there's odds and probabilities that you put in your favor. I want you to talk about just a couple of different odds enhancers or something that you might use as an odds enhancer in your trading and investing with options or Forex or futures, and just kind of discuss that, and then we'll get on to the other pillars of investing and trading.
Yeah. So I know a lot of people focus on indicators, and I know you have a good keyword for indicators, like Bollinger Bands and all that good stuff. Mm-hmm. They're lag indicators. So it's, a lot of people that put all this stuff on their chart, I don't want to say they don't know what they're doing, but it's kind of useless. Especially from what I've seen in the markets, just, if they're doing Bollinger Bands, it's always behind the play. Mm-hmm. And for odds enhancers, what I do is, supply and demand. So I follow a step-by-step process. I find supply and demand. I follow trend when I trade, and it works pretty well. And I have my trade plan set in place to where if I'm wrong, I get stopped out, and if I'm right, I know exactly where to target.
Yeah, so what you're really talking about is that second pillar as well. You're leading into a plan which has set rules in there. And having those rules, they're actually designed to stack those odds in your favor. An example would be, say you have everybody knows how a casino works. I think most people have been to a casino, and when people go to a casino, they go to gamble and hope they make some money. Well, let me ask you this, Luke. Is the casino gambling?
The casino is not gambling.
They're not gambling. To a certain extent, yeah, they're placing bets on cards, whether it's blackjack, but they actually have the odds stacked in their favor. For example, blackjack, and one of their odds is they go last. So that gives them the opportunity to have everybody else bust and automatically win. Another rule they have within blackjack would be they stay on 17. Right. So, but the thing is, and you talked about earlier with having a plan, they stick to that rule. They do not deviate from that. They are always sticking on 17. They are always hitting on 16. So they're taking the emotions out of that, right? Which is very similar to trading and investing. And you talked with a lot of people, and some of the common pitfalls people have is they get emotional. The fear and greed in the markets runs the markets. Now, when you have those rules, is it much easier to follow them when you actually know that you're stacking those odds? I mean, how does that help with the mindset as a trader or investor?
It is kind of something you need to learn how to do. Like, it doesn't come naturally, teaching yourself how to be a robot isn't the easiest thing. But you got to kind of make it like boring in a way, to where you're setting this up as a business. It's not emotional. It's all numbers and probabilities. And at the end of the day, you're doing it to generate income, or however you're looking at the markets. If you're going to get emotional about it, it's not going to work out with anything in life too. It's something you kind of got to teach yourself.
Yeah. Well, the nice thing is, a lot of this stuff is technically built for you if you get the right education. You don't want to just go try figure it out on your own. And that's the problem with the financial markets. It's so easy to get in the markets. You don't have to go to college. You don't have to go anywhere to basically get started, because all you have to do is open up an account, fund it, and go start clicking some buttons. And you think about it in any profession. You have a nurse. I was talking with 2 different nurses today. They have training. You want to get a haircut. That person has some sort of training for that. They didn't just go start cutting hair. You have people in construction. They didn't just start pushing dirt. They didn't start hammering nails. They were taught how to do that. It's a skill that you got to build. And I don't know why people think that the financial markets are different, right? They just go do it and hope it works out. But that's the gambling effect of the markets. So people think the markets are gambling. Well, it is if you don't have set rules within a plan. It is if you don't stack those odds in your favor. But one of the most important pieces of this, the third pillar, which is having discipline. You have to have the discipline to actually follow that path. Now, when you have that discipline, following your set rules and your path. I mean, you spoke with a lot of people. Does it really help with those emotions as far as just when you do stick to that path? Does that help you with the confidence as well and continue to keep you going in the market?
Oh, yeah. If you don't have the confidence, you're not going to be decisive. You're not going to press the button at the end of the day. You have to, rely on your strategy and use it, and it has to be effective and efficient when you're in and out of these markets. Because I think there's a stat out there where I think 95% of retail traders quit after their first year.
Yeah, you could almost Google it. It's kind of like, it's actually, the stat is 80% quit within their first 2 years.
80,
yeah, but 95%
is insane.
Yeah, but 95% of people fail.
Right.
And it's because they don't stack those odds. They don't have rules within a plan, and they don't have the discipline to follow it. But this is a learned skill, right? I mean, think about anything you've learned ever. I mean, you like sports. I mean, you're not the best fantasy football manager, but you know how football works. You love football, and people don't just go and play football, do they? They go and practice. Allen Iverson once said, "Practice? Why don't we talk about the game?" Well, even though he is in the Hall of Fame, he did practice. And he practiced countless hours.
Speaking of that, too, the Manziel doc.
Okay.
He's a guy who just so skilled, unbelievable. And then you look at him never watching film, partying. So the things on the side, I mean, you can kind of apply that to anything in life. If you're not going to put in the work that gets you to the finish line, it's not going to last. Yeah. And he had a hard crash.
He actually lacked a couple things. One, I think he had the odds. He was a great athlete, had a great mind, right? Had the drive, but he didn't have. I don't think he necessarily had the rules set for him. I think he had so much freedom because he was that he was the big man on campus. He could do whatever he wanted, and nobody cared what happened. I'm interested to see the Florida Gators one, where a very similar situation, but
Tebow
those years, yeah. But he didn't have the rules to follow. If he did, he didn't have the discipline to actually do that. Same thing, and he, as you mentioned, he didn't watch any film, didn't practice his craft. He lasted 2 years in the NFL, maybe 3.
And he was suspended half the time.
Yeah, so that's very similar to the financial markets. Nothing to say nothing about bad about Johnny Football. He was one of my sleepers in my fantasy football draft, and he definitely was a sleeper. He stayed sleeping.
That probably worked out well for you, right?
Yeah, not very well, we'll say. But it took up a spot on the lineup, I'll tell you that. But that being said, you got to have those 3 pillars for successful trading and investing. You need to stack those odds, have strict rules within your plan, and then you have to have the discipline to follow that. So I like the examples that you kind of threw out there, Luke. Since we covered that, let's do a quick market overview on the market. Today, obviously, is the 21st of August, Monday, beginning of the week for the trading week. Now, looking at the market today, it started all a little choppy, and market is up on the week. Now, going back to our strict rules in a plan, you were talking about being short the S&P 500. what, 2 weeks ago or so. Mm-hmm. Now you have set rules within that plan right now, right? You mentioned, I believe it was last week, it's more management now, right? So as you're managing this trade, do you still have your rules to get out at a certain point, or are you just hoping things work out?
No, I'm not hoping anything. So I have a target put in place. I have a stop, and a lot of these times, especially when I'm in these you call them high time frame supply and demand zones, and you're actually in the trade, I do what's called a moving stop. So you can find higher highs or lower lows if you're going in an up or down trend, and just kind of follow the trend along, because once the trend breaks, normally price would get you out anyways. So locking in profits is what's the one saying everyone says? Nobody ever went broke from taking profits. How's it go?
That's what people say. Yeah, no one's ever broke by taking profits. I don't know where you're going with that, but that's, I think, what you're talking to.
Well, yes, but at a certain point too, with anything, it's you don't want to give back anything that you've gained, because greed and all that can come into this game. You have to lock in at a certain point, and
so you have set rules that are designed for that. Then,
yeah,
like it's not like you're just guessing. You have strategic spots, which is where you felt you were stacking the odds in your favor. And if it gets to that point, get out with your profit, because it could go higher or go further away from your target, which means you're making less. So locking that in, and that's a great rule to follow. But you're following that because you have the discipline to do that. And the cool thing is, we're doing this podcast right now. You're trading right now, but you're talking here with the millions of our listeners. So with that being said, you don't have to be at your computer to do that, because it'll execute that automatically for you, which is pretty cool. So I like that analysis or analogy on the market with following your rules and stuff. So just looking at a quick overview. So this market, the S&P 500 currently is at 439.30. And last 2 days, it's gone up ever so slightly on Friday, but because it gapped so much lower. But we're seeing some strength come back into the market. Looking on a smaller time frame, I could see this market continue going up another potentially 4 points or so. If it gets past there, we'll probably continue. This might have just been a little pullback. Who knows? We do still have that demand zone back at 430, that area, 430 to 425 area. So I do see this market continuing to go down there longer term, but we'll see what happens here on the shorter term time frame. Do you have any thoughts, Luke, on the commodity market? So as far as we talk a lot about some of the ETFs, XLE being the energy sector. In the last few, for a while now, since June, it's just been straight up. XLE has been straight up since
it's up
June.
Like 50% or something, isn't it?
Since June, it's up about, looking at the market, 17%. 16-17% since June. That's the energy market. Okay. Now, a lot of people are concerned about gas prices, and the XLE and oil prices are kind of a good gauge off of that. Looking at the chart of oil, which is going to be very similar to the energy sector, we broke a high in this, in the trends. You were talking about trending earlier. We broke a high of around $82.90. We broke that last week. Now, do you think this trend has changed and is reversed to the upside since it has broke that, or what are your thoughts on oil? Any insight on that?
At the moment, it kind of looks slightly sideways, so you'd still need to see maybe a higher low form. Just on that chart. I don't know what a higher time frame looks like.
Yeah, this will be a daily chart that we're looking at right here. But so that's a great insight, because based off of his rules, he's looking at a confirmation to say, okay, yes, it is starting to change the trend. Now, that being said, there is some demand zones below. So since we broke that high, as what you're alluding to, maybe we might wait to see if it comes back down to an area of interest where we can get back into an investment like this, and if then the continuation of that new trend, which in this case oil is an uptrend. That being said, I would say we're sideways, since, quite frankly, September of 2022, because it's at the exact same price now than it was in September of 2022 at about $80.12 per barrel. So going back to your odds and rules and discipline, you have to stick to those that strategy. Is there any stocks that you want to look at? And we talked about UPS, was it 2 weeks ago?
Mm-hmm.
No, I haven't looked at it for a little while here. You said it was a terrible thing with that as far as for the stock price that UPS was increasing.
As far as the company, I didn't talk about the stock price.
Well, but that's what we were alluding to, which actually the stock price has been dropping probably since then.
Very interesting.
Very, very interesting. Actually, from July 25th to today, this market is now down almost 13%, which is actually getting to the lows from June of this year. Still, this one's almost a sideways market as well. So we really need to see if this price breaks below 165. You were correct that this was a terrible move for UPS. And I'm saying it's going to continue to go up after this little drop here. So that's the difference of opinions. But you know what? Does our opinions matter with this?
No.
Not really. It's all based off price action. And the price will tell us and what us to do on a price chart. So let's see. We got Target currently at 127.80, a big drop again here today. Really sideways ever since they had some marketing problems, and still down from the all-time highs, well over 50%.
Didn't they put your face on a can or something?
They did not put my face on a can. I don't know what you're talking about there. But hey, this is a family show now. But yeah, still sideways market there. I still do like that demand zone back at 110. 110 to 100, so I would love to see that come down here. It's not offering a whole lot of premium for options, so volatility is still low on that. So that's Target, currently at 127.80. One more I wanted to look at was Macy's. Something that you were looking at last week. Was that you?
It could have been. We went over a lot last week.
Yeah,
lightning round.
I think that might have been a lightning round, but there was a couple more that we were looking at. Any major stocks that you want to peek at today before we close the show up?
You love your WWE.
I do love my WWE, and WWE nearing today actually all-time highs again, right around 113.89. This was actually my first stock I ever bought back in 2006, I want to say. And for those of you listening, I think it was 2006. Let me double check here. We'll go to a monthly chart and look at this. Back in 2006, price was at about $13 per share. Now currently price is at 113%, which is a pretty decent move for WWE, which is about a 813% rate of return. Did I hold a WWE that long? Nope. That was before I knew anything about trading and investing. As a matter of fact, I think I lost money on that trade. So that being said, does buy and hold work? If you have the right stock, sometimes it does. That being said as well, this price went up to $96 back in 2018, dropped down to 27 in 2020, and then just showed major strength from there. So then again, you still don't just want to buy and hope, because that's just a hope strategy. Having set rules, odds in your plan, and then having the discipline to follow that. So thanks a lot for coming on the show here today, Luke. We got a lot more to talk about in the next one. I wanted to redo the 3 pillars of trading and investing since we had the audio problem yesterday. So for those of you that missed the show yesterday, hopefully this will suffice and get you down the right path of successful trading and investing. That being said, collect your profits when they're given to you and protect your losses when they are small. Until next time, retire young, my friends.